Hi, everyone. Thanks for joining us today. I'm Mary Christensen, the Director of Product Marketing here at Billing Platform, and I'd like to thank you all for taking time out of your day to join us to learn about revenue automation and how you can master new business models at scale. With us today, we have Morgan Stanton, the Senior Product Manager from Billing Platform, who's going to talk about the challenges recurring revenue and usage-based subscriptions can present, how revenue automation can address these challenges, and some key considerations when shifting to recurring and usage-based business models. Morgan, over to you.
Awesome. Thank you so much, Mary. Hello, everyone. Again, my name is Morgan Stanton. I'm the Senior Product Manager in charge of our revenue accounting solution here at Billing Platform. A bit about me, my background, I'm a CPA, and I also spent 6 years at KPMG, where my roles included technical accounting advisory manager, where I led ASC 606 implementations, as well as ASC 805 accounting integrations. I worked as a product manager in their audit technology group, helping build and design internal software tools for KPMG auditors. And I also cut my teeth in the auditing practice as an in-charge senior leading integrated audits for Fortune 250 companies in the software and technology space. So with that said, let's dive into revenue automation. So I wanted to set the stage here with a short little quote. So Microsoft Excel is the most widely used revenue management system in the world currently. And personally, I think this is sad. So, diving into this a bit deeper, managing invoices, managing AR, doing revenue recognition and revenue accounting in spreadsheets, specifically for subscription and usage-based pricing models, requires a lot of people and a lot of time. And it also leads to more errors and risk of control deficiencies. And for sure, this does not scale for accounting and finance operations teams. Now, what does scale? Revenue automation scales for accounting and finance ops teams. You can do more with less people. You can do more in less time. You can reduce errors, and you can decrease the risk of control deficiencies. And with that said, what is revenue automation, right? So let's maybe define this a bit further before we dive in deeper. So revenue automation is the end-to-end automation of an organization's revenue process, including all aspects of the revenue transaction. So we're talking pricing and quoting, upfront, kind of on the pre-sale side. We're talking orders, subscription management, kind of the meat and potatoes here of billing, AR, invoicing, collections, payments, all the way through to revenue recognition and revenue accounting, and then onto reporting, which kind of encompasses not only financial reporting, but operational reporting as well. Now that we've kind of defined revenue automation, let's talk about the approach to get your company or company that you're advising from the kind of manual, historical, legacy revenue operations to actually operationalize revenue automation. And here we've outlined 5 major steps that any company can take to reach revenue automation. And step 1 here is, first, we have to understand and document the current business process flow, right? All the way from quote to cash, and also quote to revenue recognition. Step 2 is then layering in and finding, okay, now that we understand our current process, which parts of that process are currently manual in nature, i.e. not automated. And then from there, we can define and articulate the business logic and requirements underlying each process, right? Like whether it's an automated process or a manual process currently, there's business logic underpinning that that can be operationalized and streamlined. So, and then that brings us to step 4 is we can then refine and streamline the process and really get it designed for automation. And then once we have that idea, that new process that's streamlined, we can find software solutions or a solution that can programmatically automate the business logic requirements and controls you defined in previous steps. So from here, I wanted to take us on a bit of a journey and use that process with an illustrative example where we would kind of walk through step by step what we may do as a company going through this transformation. So here I've picked Internet of Things IoT technology company. The company sells kind of enterprise B2B. Sales include bundled arrangements. We've got multi-year software subscriptions, hardware, and implementation services. Bundles can be customized in a bunch of different ways, so the sales team has a lot of flexibility there in how they build bundles, different levels for each type of product, things of that sort. Timing of invoicing varies based on negotiated terms, right? So we need kind of built-in flexibility there from an invoicing perspective, because there is a lot of variability. AR and payments currently, pre-automation, are tracked in spreadsheets. AR and payment data is then transferred to secondary spreadsheets to do all the calculations for revenue recognition and journal entries, and then to go along into their ERP system. And then revenue and deferred revenue accounting is done on a per contract basis under ASC 606. That makes sense, but it's done in spreadsheets currently. And then summary GL entries are manually entered into the ERP system from there. So that's kind of our starting point here for this example. And we'll walk through those steps I previously mentioned to see how a company like this can transform their revenue operations and reach automation. All right, so step one, as I mentioned, is understand and document the current business process flow from quote to cash and quote to recognition. So here's our company that we talked about, our IoT technology company, and how we understand and document the current business process flow is, let's make a diagram, right? So this is a pretty high level, I would say a 10,000 foot view diagram here, but it articulates, hey, we're starting with a salesperson creating a sales quote. In this particular case, they're creating it in Microsoft Excel. We've got some review controls going on, so maybe sales manager or maybe even a regional vice president reviewing the quote to ensure it fits policy. Someone's attaching that quote and sending it to the prospect via email. All the way through to, hey, we've got orders or invoices going into the billing system. We've got invoices communicated to customers. Then we've got payment data coming from the bank being put into the billing system. We're exporting data for accounting purposes. Here's all the manual accounting calculations we described previously. Review controls, we've got accounting managers reviewing manual journal entries, input into the ERP system. So that's our high level flow here. Obviously, in the real world, each of these steps would probably be their own diagram in and of itself to get to the right level of granularity. But this gives us a good 10,000 foot view perspective. All right, so once that's done, then we need to identify the manual processes within that flow, right? So we're gonna look back at that flowchart diagram, and then we're gonna start identifying, hey, what's manual here that's really our opportunities for automation. So with that, here's the same exact diagram, but I've now kind of put a red flag against what's manual in nature here. And as you can see, pretty much every step in this process is manual. We're manually creating a sales quote. We've got manual review controls to make sure the quote maybe agrees with within pricing ranges that the sales team has agreed upon. We've got someone literally attaching the quote into an email and clicking send. Then we've got someone entering that quote information into the billing system manually, manually emailing the invoice to the customer, et cetera, right? So every step is manual here. And this really provides us with a lot of opportunity for automation. And I will note that every manual step here, there's business logic underlying this, right? There's methodology here that's being followed. And then from there, the next step is to define that business logic and convert it into requirements. So if you see here, I've taken a screenshot of just a small portion of that diagram. So this is the revenue and deferred revenue accounting spreadsheets step in that process. And this is an example of kind of how you can convert that process or that step into tangible kind of requirements, I'll call them, or really communicating the business logic. So as you can see here, I've got two things. So we've got a process. We've also got technical accounting policy memos, which for this particular revenue step would be highly relevant if we're trying to capture the requirements in business logic under ASC 606. So here's a few examples. I'm not going to go through all of them, but it just provides an example of what these requirements could look like. So with our revenue and deferred revenue spreadsheet, to automate this, we need the ability to create performance obligations based on products and services from orders in compliance with ASC 606. We need the ability to assign standalone selling price to these performance obligations. We need the ability to defer revenue that's been billed but not delivered. Ability to recognize implementation revenue in phases based on percentage of completion. So these are all kind of aspects that are in the technical accounting policy memo, aspects or business logic that the accounting team would know, as those are the primary stakeholders for this step in the process. And the exercise here is going through and documenting very complete and very accurate requirements that can then be leveraged and automated using the appropriate system. So once we have these documented, and I would say this is a pretty decent amount of effort, right? So like, you want buy-in cross-functionally from the organization, from specifically the accounting, the collections team, the billing and invoicing team. You want buy-in from all of these teams, as well as internal technology stakeholders as well. So everyone's moving in the same direction as you're capturing these requirements. So from there, step 4 is really, hey, now that we understand the process, we've identified the manual steps in that process, we've articulated our requirements and our business logic that underpins and is the foundation for those processes. Now we can take a new, fresh look at this and refine and streamline the process for automation. And so this is the same exact business in our example, right? We've got our IoT technology company. We've got all the same steps, but here we've converted or streamlined this to a process ready for automation. If you remember before, we had a person actually going into an Excel spreadsheet to create a sales quote. Well, now we can configure a quote in a system, and the system auto-generates the quote PDF. The review and approval is within a system and happens automatically once the approver clicks approve. The email gets automatically sent to the customer, right, with that auto-generated PDF. There's an ability for the customer to click, approve or not approve in the email. If they click approve on the quote, it's an approved quote, and it can go automatically and integrate into the billing system and start generating invoices, so on and so forth, right? So I'm not going to go through the entire thing here. But it shows you that once you've defined your requirements, you can start thinking about how you can automate each and every step. And then you can design a new process, the dream process, from here. And once this is articulated, we're really ready, shovel ready to go start searching for solutions that can automate, your new process and automate your business model. So what are some outcomes of revenue automation here before I dive into different software solutions that may be able to help? Well, there's kind of 5 major outcomes here. The first is end-to-end connected audit trail, right? So before, we had data in disparate spreadsheets, we had information in emails, nothing was in a centralized system. So once you have an automated process end-to-end, you can literally go from journal entries on the general ledger all the way back to an original quote that was sent to the customer, all within a system, all in real time. From there, decreased errors, right? So if everything is automated, if you have the system performing actions that are predefined within guardrails, with automated controls being performed, you decrease errors, right? There's not, the as much of that human element there, less opportunity for people to, fat finger spreadsheets, things of that sort. And then thirdly, we have less reliance on resources to scale. And this doesn't necessarily mean downsizing your teams. It just means that your professionals, your resources, and your teams can be reallocated for more strategic initiatives, right? And then as the business grows, you don't need to also continue to grow your teams as the business scales. And then fourth, increase speed of reporting, right? So this kind of brings us back to the first one, where if we've got all of this data in the system or in several systems that are all connected and integrated, that's data for us at our fingertips that we can generate reports on in an automated fashion, right? We can configure reports, schedule them, send them out to the right stakeholders, all in an automated fashion. And there's no need to compile information in spreadsheets that then get compiled into reports, right? There's a lot of lead time. There's a lot of man hours that go into manually compiling reports and sending them out on a recurring basis. And this just accelerates that timeline in a significant manner. And then lastly, we have increased reporting insights. So as I mentioned before, we're really transitioning from having data in disparate sources, right, such as spreadsheets, emails, things of that sort. And we then move it into kind of this centralized system. Well, now we really have data that didn't exist prior, in a usable manner. And so we can start reporting on things that we were never able to report on before. And this generates new insights for the business that, have a lot of strategic value, not only for the operational teams, but for company leadership. So from there, now we can really find the right software solution that can automate the business logic and requirements that we had previously defined. So there's several different types of systems out there that can help automate different areas of revenue automation. So on the, the front end pre-sale sides of things, we have CPQ systems that help kind of manage pricing and manage the configuring and quote process. We have billing systems that are fantastic at managing orders and generating invoices and managing what products and services customers have purchased. Billing systems traditionally, have great integrations with payment gateways, tax providers, and a little bit of revenue accounting capabilities there as well. And then we have revenue accounting systems, which really focus on the revenue recognition and accounting side of things, as ASC 606 and IFRS 15 get quite complicated. There's a lot of capabilities there that traditional ERP systems don't necessarily have or cannot do in an automated fashion. So that's where the kind of purpose-built revenue accounting systems come into play. Then we have ERP systems, which really are have a massive scope for the organization, right? These manage, from an HR perspective, they can manage your personnel, inventory management, all of these things, as well as, your just traditional accounting, general ledger management. ERP systems typically have, billing and, basic billing, basic CPQ, and basic, rev rec capabilities, but definitely not purpose built for any of those. It's kind of a jack of all trades, master of none. And then we have revenue management systems, which is kind of the this new emerging type of comprehensive system out there that's really more of a platform, right? So revenue management systems are intended to cover a lot of bases on the end-to-end revenue perspective. So they typically can provide advanced CPQ capabilities, advanced billing, advanced revenue accounting that really help automate the end-to-end revenue process, but maybe don't necessarily go into the inventory management and HR, personnel management, and things of that sort that are covered by ERP systems still. So that's a quick background on those systems. And so from there, we have considerations when shifting to recurring business models. And we have kind of a major goal here is we're trying to automate as much of the process as possible in as little number of systems as possible, right? So I just mentioned that there were, several different types of systems. You could go out and say, hey, I'm going to pick a CPQ system to do my CPQ, billing system to do my billing, a revenue accounting system to do my revenue accounting, and ERP to manage my general ledger. You can certainly go out and do that, but you have integration points at each step of the way that you lose data context, right? So you might not be able to access all the data from your CPQ system when you're integrating over to the billing. You might only be able to integrate 80%. And then you might only be able to integrate 80% of your billing data when you integrate with the revenue accounting system. And by the time you get to the very end, you've lost, maybe 60% of your data context there. And so you want to really automate as much of the process as possible in as little number of systems to kind of mitigate this loss of data context. And from there, once you've determined which systems you're going to use, you really want to prioritize solving for the most expensive processes first, right? And so what I really mean by this is if you've got, a couple salesmen working, configuring quotes and sending quotes out manually, you've got maybe a couple billing people, and then you've got an entire army of revenue accountants working in spreadsheets. As the business leadership, you look at that and say, hey, our accounting is our most expensive process here, so we want to prioritize automating that component first. So that just helps kind of prioritize from a resource and investment perspective which problems you want to solve first. And then after that, it's prioritizing outcomes. So this could mean, hey, we want to be able to report on billing and AR in a much more aggressive fashion. We want real-time access for leadership to see, what's our AR balances, what's our unpaid, are we having collections issues, things of that sort. So if that's a prioritized strategic outcome, you may want to prioritize solving those things first, and that may inform the systems that you go after, right? If you have an outcome that's especially important to leadership, that's not negotiable, and there's only one system out there that can achieve that requirement, well, that's a consideration for you. And the fourth item here is consolidate the sources of truth under the same roof. And this goes back to kind of why our goal is to automate as much of the process in as little systems as possible, because you want ideally, you want the source of truth for all revenue data within one system. And then lastly, automation is not replacing revenue accountants. It's not necessarily replacing, the collections team or billing team. It's just giving you the ability to scale the business without having to significantly expand the teams. And it's providing more opportunities for those teams to work on maybe more strategic initiatives rather than, data entry and other manual steps like that. And with that, Mary, I will send it back to you.
Great, Morgan. Thank you so much. That was a lot of really interesting insights about automating revenue management. So appreciate your time. If you all have any questions, please feel free to reach out to us. And if you're interested in learning how revenue automation can help your business, please contact us for a free consulting session. Thanks for joining us today, and we hope to see you in a future session. Cheers.